Hello, everyone. Welcome to our webinar. This is our first webinar of the year, the AvaOptions webinar, where we're going to introduce our brand new web trading interface. My name is Steven Reiter. I'm responsible for the options business with AvaTrade. I'm going to show you our new web trader, which I suppose some of you have already started. Let me say that I am watching for questions. If anyone has questions they want to ask, I'll be able to answer them along the way. I'm going to show you here both our web trader as well as the mobile app. I've got an emulator here that should let me show the mobile app. Let's see. There we are. I'm going to squeeze that down because I want to show you that the new web trader has the same look and feel as the mobile app, which we're quite proud of, or I'm quite proud of. I'm just going to pop out my questions. Make sure I can see you. Okay. Can everybody hear me? Or can just a couple of people confirm that you can hear me? Yep. Thank you. Okay. Thank you. Perfect. Thank you, everyone. All right. Thank you, Carlos, Andreas, Muzi, Ephraim, Asgar, Jan. Okay. We're all set. Thank you. Okay. We're going to get started. So again, my name is Steven Reiter. I'm responsible for the options business at AvaTrade. This web trader and the mobile app is our own proprietary project to build an interface that we think is going to help people understand options, to make options intuitive and clear, and to offer a really unique trading experience. And on top of that, of course, we have great pricing, great customer service, trading conditions, and more. Now, I'm not going to dwell too much on options theory. I'm going to assume that most of you know what options are, or you can follow up on this webinar by watching some of our other webinars. For example, if you want to learn about options from the very beginning, there's a webinar called Options, What, Why, and How, and you can find that in the AvaOptions playlist in YouTube. So let's start off with the app itself, with the web trader. This is our web trader. It looks like a lot of other trading interfaces. Let me just get rid of some of this. Bookmarks, let's not show that. Okay. This looks like a lot of other interfaces. And I'm going to go to full screen. What's full screen, F12 or something? I don't remember. I better not try it. F11. There we go. Okay, so now you can see the web trader in full screen mode much better. I don't know how to get rid of this thing. I'll just throw this down at the bottom. Okay, it looks like a lot of other trading platforms. This is the original or natural state of the screen when you first log in, or actually I'll show you the login screen. If you go to the website AvaOptions.com, you can log into the web trader directly. You can log in with your account number, that's your trading platform number, not with your email and password. The single sign-on is coming in a couple of weeks. You'll be able to log into the Ava website, and from there, click to go straight into the web trader. But for now, if you visit AvaOptions.com, put in your account number, which is your trading platform number, and your password, and click login. This connects to the server, gets all the data it needs to be able to trade, and we're in. So what we have here is a screen. On the left side, you have all of the instruments that are trading. So for example, currencies, the major currencies are at the top. In the center, you can see equity indices and crude. And then below that, you have all other currency pairs in alphabetical order. We're showing in the main trading screen in the center, euro-dollar, spot trading. So this is just to trade FX. Let's say you want to buy 500,000 of euro-dollar. I'll use the slider, or you can use a calculator to enter $500,000. I want to buy 500,000 euro dollar. This is showing a chart with 1 hour candles. You can change your candle size just by clicking here. Whoops. Change your candle size. I can make it 2 hour candles. I can add technical indicators, for example, a nice moving average like that. And this is where the market has been on the left. And on the right, you can see what your profit and loss will be if I buy Eurodollar. I can see my profit and loss in price terms, or if I click here, I can see my profit and loss in dollar terms, and this is a dollar account, or I can see my profit and loss in euro terms. So you'll also be able to see it in your account currency. For example, if you have a Canadian dollar account or a Swiss franc account, you'll be able to see your P&L profile in your account currency. So very simply, if I buy 500,000 euros, the market goes up, I'm going to make money. If it goes down, I'm going to lose money. I can go short. If I'm going to sell, then I'll profit when the market goes down. And I have unlimited profit potential. And on the upside, if the market heads higher, I have unlimited loss potential until I run out of margin, of course. If I click the word limit on the right side of the page, I get my entry and closing limit orders. So for example, I can put in an entry limit saying I want to buy at 122.50. And I could put in a take profit at 123.50. So you see how intuitively the screen tells you if I buy at 122.50 and I reach my take profit at 123.50, I'm going to earn $5,000. That's a 50 pip, that's a 100 pip profit on 500,000. And it's a dollar quote currency. So that's $5,000. So I change the size of the position. All these numbers update on the profit and loss diagram as you would expect. So I can trade 1 million, I'll make $10,000 on the profit. So it's visual. I can also put in a stop loss down on the bottom. So you see on the profit and loss diagram, once we reach our take profit, the P&L turns gray. You're out of the trade, and down on the bottom turns gray again. If I switch to going short, same story. Now I have a stop loss at the top and a take profit on the bottom. And this is really visual. You know, if you try to enter a take profit and a stop loss just with numbers, I find it can be very confusing. And I always promised my mother I would try to make a trading platform that she could understand. Not everyone's mother has trouble like mine, but some do. So this is a trading platform that almost anyone should be able to understand. And of course, I can adjust levels anywhere you like. Up here, this is a stop loss. If I drag it down below the entry level, it's a take profit. If I buy, if I sell, you can't mess it up. And if I click, let's just say I want to do a market order with a take profit and a stop loss like this. Let's make this a 123.50 take profit good until the end of this week. And I'll make the stop loss at 122. And that's good until canceled. Click to buy. We get a little confirmation window saying that we're going to buy €1 million at the market rate with a take profit and a stop loss. I have $90,000 of margin available. This trade requires another $12,000 of margin. And my overnight interest, the overnight carry, is going to be $77 a day. And it shows you the bid-ask spread as well, which is 0.8 pips right now. I click execute, the trade is done. And you see it immediately down below. I'll just show you a little more clearly. In the open positions and pending orders window, you can see that I bought cash, I bought FX, $1 million at 122.953. And in blue, I have a pending stop and a pending limit. So they're connected. You see the blue, it's waiting, it's a pending order, is there to close the open position if I want. Very clean and clear. Now, why did we create this kind of an interface? Because our specialty is options. Instead of trading spot, if I click the word spot, I can now choose an options trade. I can trade a call or a put. I can also trade a dozen different strategies like put spreads, straddles, and strangles. And so let's start with a normal call. A call, as most of you know, I believe, gives you the right to buy an asset on a specific date at a specific price. So if I have a call, I have the right to call away from AvaTrade to own Eurodollar at the strike price. So in this picture, the strike price is set at 123 in blue right in the center. I have the right to buy euros at 123. My expiration date by default is 1 week, 7 days, which is the 11th of January. I can change the strike with my mouse just by dragging the strike up or down. And here is a 124 strike, for example. There's a 124 strike. Now look at the green area and the red area. The red area of the profit and loss diagram, I can make this bigger. The red area is showing us how much we might lose, and the green is showing us how much we can win. So if you buy an option, you're paying for it today. This is an option on €1,000,000 for a week. It costs $2,200. That's the most I can lose. I buy the option, I pay for it with my cash balance, and that's the most I can lose, as you can clearly see in the diagram. On the upside, however, if the market zooms higher, I have unlimited profit potential. You can see how much. Now, let's frame the risk. Let's get a good understanding of what's a likely outcome. That's what this shaded area in the center is for. This is called our confidence range. A confidence range is showing us with the white dots, this kind of central arc in the center. This is called a plus and minus 2 standard deviations confidence range. This is showing as time goes by, based on the implied volatility of the option, what the market thinks is a reasonable range for the option. We can say that we're 95% confident that the market is going to be between these 2 white dots at expiration. And in fact, where we are also tells us a lot about the probability of being there. This option, this call, you see that the price is 23 pips, 0.0023. The delta is 0.24. A delta of 0.24 tells us basically that the market says there's a 24% chance that in 1 week we're going to be finishing higher than 124. Someone is asking, how do you log in? You can just log into the Ava website, log into your account at avatrade.com, and then when you see your AvaOptions account, click on WebTrader, and it will link directly to this site, or go straight to AvaOptions.com and log in with your account number and password. Now, I can buy an option that's at the money. See, it's more expensive. The at the money option costs $6,700, or actually we're trading now at 123. The 123 call costs $5,600. And in the money call, the right to buy at 121 is going to be much more expensive because it's already got value. If I have the right to buy at 121 and we're trading at 123, it's already got 2 points or 200 pips of value, of intrinsic value. So clearly it's going to be more expensive. But because you're buying an option, you still see that the maximum loss is what you paid for the option. Okay. Now someone's asking, what is Delta? We have a webinar called What is Delta? Please visit the AvaOptions playlist and you'll see a whole webinar explaining all about Delta. But Delta, again, Delta has 2 uses. First of all, it tells you today how much the price of the option should change given a change in the underlying. So if this option today, let's look at the money option at 123, has a delta of 0.5, that means that if Eurodollar moves 10 pips higher, the option is going to move 10 pips times 0.5 higher. So the option moves with a delta of 50%. You can see this on the orange line. This orange line is our horizon line. It shows us the value of the option today. The red and the green is showing us our P&L as of expiration. And I can see the evolution of the option price over time by moving the horizon line. I take this orange dot under horizon and move us towards expiration. So you can see how the price of an option decays over time. When you get to expiration, it has no time value left. The option is worth intrinsic value. It's simply worth the difference between the strike price and the market price. But today, the value of an option depends on volatility, time, where is the asset, and where is your strike. Someone is asking if it works in a handheld device. It absolutely does. This is our, our mobile app. I hate when this happens. It disconnected. We have a mobile app called AvaOptions.com, and the mobile app looks just like the WebTrader. AvaOptions.com, you can find it. AvaOptions is the name of the app. You can find it both in Google Play and in the Apple App Store. I can sell an option, looks like that. If I sell an option, the most I can earn is what I sold the option for, right? Now somebody else is buying the option from me. And the most I can lose is unlimited because I've sold an option. Now, this is not more risky than trading spot, because if I go back to trading spot, I have unlimited loss potential as the market moves higher. Same thing with an option, except with the option, at least you're going to earn this premium. So actually the option is going to outperform the spot trade if it goes against you. AvaTrade Go does not let you trade options. AvaTrade Go has something called AvaProtect, which is insurance, but AvaTrade Go does not let you trade options. The AvaOptions platform lets you trade both the asset itself, as I showed you. I traded Eurodollar, and options. So let's look at the expiration date. The expiration date can be 7 days, but if I click the expiration date, I can choose any expiration date from 1 day to 1 year. As I move my slider, you can see that the range, the fair range, the confidence interval is changing. If over a longer time period, the market has the potential to move much more. So we automatically adjust the picture to show you a fair image of the potential risk of where the market can go, just to make sure you're not thinking you bought something with a free lunch. There is no such thing as a free lunch. Okay? So we can change the expiration date either with the calendar dates like this by clicking on a date, or you can click one of the standard dates like 6 months, or you can use a slider. They all work the same. If your trade is at least 100,000 or 10 lots, you can choose any expiration date. However, if your trade is less than 10 lots, so for example, an option on 50,000, then you can only choose specific dates like the overnight, the 1 week, 2 week, 1 month, 2 month, 3 month. You can only choose standard dates, which you see highlighted in blue. But if your trade size is at least 10 lots, you can choose any date, just like it says here. Select a trade size of at least 10 lots. Gives me the opportunity to do it. Change it to 10 lots, and now I can trade any size. Okay, so let's choose a 1 month option, apply, and I'm gonna buy this option. Let's make the strike a little bit higher. Let's make it 124.50, buy. Confirmation again of what I'm doing, execute. Now, when you buy an option, you don't need any margin. If it's the only trade you're doing, if you're buying options, you pay for it with cash and there's no margin required, which means you can have tremendous leverage if you buy a highly geared or a low-priced option. If you combine a margin product like FX trading or shorting options, selling options, then we use what's called span margining. Span margining is the same type of margining, risk-based margining that is used by all the exchanges and used by professional traders, by banks, etc., to measure your risk. Let's look at dollar CAD. Here's an option on dollar CAD. Again, I can change the picture. Instead of trading a call, let's use a strategy. What is a strategy? We have a guide. Right here, this blue button. If I click on guide, all of my icons turn blue, and I can say, what is a strangle? This is a strangle. A strangle is an opportunity to gain exposure to a big market move, either higher or lower. It means you're buying both a call and a put. If you buy a call and a put, you can profit from a big move in either direction, but it's expensive. You're buying two options. So this is often used to bet on volatility, to take a short-term view on volatility, or it's used to really, if you don't know which way the market's going to go, but you think it's going to move a lot. And I should have started this webinar by mentioning nothing in this presentation should be understood as a recommendation to trade or not to trade. Nothing should be construed as advice. We are not regulated to offer advice. We're offering you the opportunity. We're offering you the platform and the tools, and we'd like you to be an educated trader, understand what you're trading, and execute according to your views on the market, according to your risk appetite, etc. And one of the great things about options is that it gives you the opportunity to limit your risk, to really target your risk exactly the way you want by buying a call, buying a put. It's not simply buy or sell. When you use MT4 or MT5, it's buy, sell, stop loss, and take profit. But it's just up or down. With options, you can say how long, how far, how much. You can even say, I think the market's not going anywhere. I think it's going to be range bound, and you can profit. So for example, here's a selling of a strangle. When you sell a strangle, you're selling a call and selling a put. That means you're earning 2 premiums, but at the end of the day, the market's only going to be either higher or within the range or lower. So you're only going to lose in one out of those 3 scenarios. Let's click try it. This is a strangle, selling a strangle. Let's choose our expiration date, 2 weeks. I think dollar CAD is going to be range bound for the next 2 weeks. I don't think it's going to break out of the range of the last 2 weeks. I'm going to set my strikes like that. Okay, so I have here the history of the last 2 weeks. And in the last 2 weeks, we've been between, looks like the low is right around now, 127, and the high has been around 129.25. I'm going to set my strikes at 126.75 and 129.25. I'm going to earn 67 pips of premium. See up here, the selling, we can click on the word price. You can see I'm going to earn $670, 670 CAD, because this is a CAD quote. If I want to put it in dollars, the dollar account, I just click it again. $525, which is 67 pips, CAD pips, which is 670 CAD. This is how much money I'm going to earn. If the market finishes within the strikes, lower than the high strike, higher than the low strike, I get to keep all of that premium. If we break out, my break even is going to be the high strike plus the premium that I've earned. So 129.25 plus 67 pips, which takes us up to about 129.90. And on the downside, my break even here is going to be at the low strike minus the premium that I've earned. So my profitable range is huge. It's bigger than the range of the last 2 weeks. I like this trade. I click sell. Again, it's telling me how much margin I'm going to need to do this trade. What's the bid-ask spread? I also have market information. I can see here where volatilities have been for the last month. Where were volatilities a month ago? Where were they a week ago? Where are they today? I can look at different expiration dates and see if I want to find some other strategy. But blue is where volatilities are today. You can see that implied volatility for 1 month options is higher today than it was a week ago, which makes sense because a week ago went over the New Year's holiday when things were quiet. It's also higher than where they were a month ago, because a month ago, the market, the 1 month included Christmas and New Year's. That's part of the reason, but there could be other reasons why implied volatilities are higher today. And I can scroll down. The standard lot size is 10,000. We tend to work here in quantity, but you can enter your amounts in lots instead, if you prefer, by clicking lots, 10 lots, apply. It converts it right back to 100,000. The PIP definition is 0.0001. Leverage is 100 to 1 when you're trading options, whether you're in the EU or anywhere else in the world. Options leverage is 100 to 1. In the EU, options leverage is 100 to 1, but spot leverage in the EU for a retail customer is 30 to 1. So options gives you higher leverage. interest rates for carrying a cash position. When you carry an option position, there are no overnight interest charges, no swap charges. And tolerance is when you leave a market order in case the market has moved slightly between the time you click to buy and the market is executed. You have a tolerance of 5 pips. So I'll go back to trading. I want to execute this trade. I'm selling 2 options. I'm selling a dollar CAD call and a dollar trade put. You see success. It was done immediately. And here they are in my open positions. Let's look at open positions. I've got the product dollar CAD. I sold a put and a call. These are my strikes, my expiration date, where it was filled to where it is now, my current P&L, which is simply a function of the bid-ask spread, total delta, which is my total exposure right now to a market move. You can see here, the slope of this line is slightly negative. It means if the market is going down, I'm going to be losing some money, right? Which we expect because we sold options. This is the shape of this curve tells us we're going to be losing money and losing more and more as the market goes against us. And the net delta is the delta of these 2 options. 13% and minus 45% gives us our net delta. Vega is our exposure to a change in implied volatility. That's for an advanced course, but basically the implied volatility today is trading around 7.5. If the implied volatility jumps to 8.5 because the market thinks that there will be additional volatility in the coming month, then my short position is going to lose $50. Theta is decay, how much I'm going to earn. If everything else is the same, this option value is going to reduce. It's going to drop every day, and I'm going to earn every day. You can see that here. If I move my horizon line, every day that passes, I move closer and closer, closer and closer to my goal. I don't know what I've done here. Here, I've got some scrolling thing going on. Okay, I'll figure that out in a second. So there is all the information, and if you want to know about this option specifically, click the I button. The I button, the I action button at the row next to your trade opens the position in the window ready to close or to add a limit order. So let me just not get into that right now. I'll come back to that in a few minutes. So these are all of our positions, or all of my positions in this account. And I think you can appreciate that this is a very unique and intuitive screen. The WebTrader, as I mentioned, looks just like it. You can shrink and you can change the size of the bars and do all these different things. You can trade crude, but when you trade crude, you're only trading spot. There's a 15-minute chart. You can only trade spot. There is no option when you're trading today, when you're trading equity indices or oil. But in about a month, we will launch options on some of the equity indices. And over the course of the next few months, we should have options trading available on all the equity indices, and we take it from there. So here's dollar Swiss. Gold, of course, is extremely popular right now. Gold is now trading at 1938. Look at that trend. Let's look at a 4-hour. So the market has just continued to trend higher and higher. And if you're still bullish on gold, there are lots of ways you can trade it. I can use a risk reversal. With a risk reversal, I'm going to buy a call, but I'm also going to sell a put. And by doing that, I can structure it so that I have a zero cost trade. I buy a call and I sell a put, which means I'm getting paid for the put. I'm using that money to buy the call. You can see right here, I'm going to buy a 1985 call. It costs $6.94 an ounce. And against that, I can sell a 119.10 put, which, well, it's bouncing around. That was going to earn me around $7. So right now they're pretty much matched. Let's go a little bit longer. Let's go out to a month. I'm going to buy that call. I'm going to sell that put. I'm buying a call that costs $13. I'm selling a put that costs $12. So we have a lot of jumpiness right now. And I have a zero cost strategy. Net, I can do this trade on 100 ounces and pay almost nothing, because what I'm paying for one is financed by the other. That's called a risk reversal. I'm buying upside and I'm giving up downside. There are lots of ways to trade. Another one is a synthetic forward. A synthetic forward lets you buy a call and sell a put at the same strike. You see here the call and the put have the same strike. There's only one button. That really means you're buying a forward. It doesn't matter where you set the strike, your profit and loss is the same. At expiration, you're buying a call and selling a put, which means at expiration, either the call is in the money, in which case you're buying, or the put is in the money, in which case we, as the market maker, AvaTrade, is going to be selling to you. So again, you're buying. I'm being asked if we will have options on stocks. First, we're going to do options on equity indices. In about a month, you should see options on the S&P 500 and the NASDAQ. Then we'll add other equity indices like the DAX and the FTSE and others. And then we'll see about options on stocks. We need to walk before we run. Well, we're already running, but we're going to do the equity indices before we do options on stocks. Keep the questions coming, folks. Now let's look at a call option, because this is just the easiest for everyone to understand. I'm going to just adjust the size of these windows a little bit. And I'm going to look at buying a call with a limit order. So you can leave limit orders on options based on the option price. So for example, if I buy this call at market and I put a take profit, just like you saw when trading spot, the underlying, you can also put a take profit on the option. So I can buy this option. Let's say I want to buy it for $2. I double click here and I simply type in 2. I want to buy it for $2. It got me something close to 2, $199.50. So I want to buy this option for $2 and I'm going to sell it when it gets to 7. Roughly 7. It's not giving us exactly 7, but I've got a $5 profit potential in this trade. And this is on 100 ounces. So it's showing us that if I buy for 2, sell for 7, I've got a $5 profit on 100 ounces. What's going on? I'm looking in dollars. I should look at it in price. What have I got here? I think I'm confusing myself. Let's go and look at it in euro dollar terms. Apologize for that. I want to buy this option. I'm going to buy it for, let's see, let's not put it in CAD. Let's put this, supposed to be in dollars. Let's put it in price terms. I want to buy this option for 50 pips. I think I had that in the wrong terms. I'm going to buy the option for 50 pips, and I'm going to sell it for 250 pips. So from 50 to 250 is a 200 pip profit, as you see here. I want to buy this option, an entry limit at 50 pips. I put a take profit at 250. That's a profit of 200 pips. If I move my horizon line over time, you're going to see something interesting happening. The levels are going to move. Because in order to earn 250 pips for this option after 25 days have passed, spot has to be higher because time value is disappearing. I'm being asked about recording. Yes, this webinar is being recorded, so you can join at any time. So today, to be able to sell this option for 250 pips, spot has to be at about 125.40. But at expiration, in order to sell it for 250 pips, spot has to be 250 pips higher than the strike, which would be 125.75, as you see right here. So today, to sell it for 250 pips, the market could be a lot lower. This is just a kind of a cool feature to understand how option works, tying together time and the option price. And of course, you can do the same thing for selling options. You can sell an option, buy an option with limit orders. This has an entry limit and a stop loss. Let's execute it. Let's make the size a little smaller. Let's make it 70,000. Execute. That's done. And you'll see it down at the bottom in a second. As soon as it comes in, I can go here to history. I can see the trade that I just did. My trade history, I sold this euro-dollar option, 70,000, I sold a call. Closed trades is showing me trades that I closed today, or of course you can choose any range right here. You want to see the last week, the last 3 days, the last 2 days. You can set whatever historical range you want to see your positions. So there's the option. I sold the call in 70,000. And it's a pending order. It's an entry stop, actually. Is it an entry stop? I guess it's an entry stop. And we're waiting for the other piece of it to come in. That'll just take a minute with limit orders for options sometimes. So let's look at closing a position. Let's check if we have any new questions. I have an AvaTrade account. I have access to the web platform, is the question. You need to open an AvaOptions account. So an AvaTrade account is great. That means that you've submitted your documents and everything else, and you're ready to trade. But if you want to trade with this account, with this trading platform, you need to add an AvaOptions account, not MT4, not MT5. But you don't need to submit additional documents. Once your documents are in, you're good for any platform. So let's say I take this call that we executed right at the beginning, and I want to close it. I'm clicking a position from our open positions. We bought 100,000 calls with a 124.50 strike expiring on the 4th of February. It's highlighted down below. When I click it, it shows up in the trading screen. But now I cannot change the strike because it's an open position. I'm interested in closing this position. And that's why it says right here, closing. I'm looking at closing this call. My current P&L is minus $87. I can do a partial close, or I can add a limit order. It looks like there's a little bug there. I can do a partial close. When I click execute, it's going to close half the position. That's done, and you see the position dropped to a size of 50,000 in my open positions window. Down below, if I go to close trades, be right down at the bottom, there it is. We opened 100,000, we closed 50,000, and we realized a small loss. I guess I'll just sort this differently. Put it at the top. There it is. We lost $38 on the half that we closed. Now, another neat feature is that you can do multiple positions at once. So let's say I have that trade. We still own 50,000 of this option. I'm going to close that for the moment. Close that for the moment. And I'm also, let's pick some other euro-dollar position. I'm long a call, and let's sort by euro-dollar. I'm long a call, and well, I'm long cash. That's not going to be very interesting. I'm long a call in 50,000, and I'm also long cash in 100,000. If I choose them both, you'll see them both on the P&L diagram. It's not that interesting to show two positions going the same way, so let's try something else. Let's choose sterling. Here I've sold a call. I'm running a small profit of $60. I've sold a call. I can close it today and recognize or realize a profit of $60. But I've also bought a call at a different level here. So I'm long a call at 135, which is actually down at the low strike, and I'm short a call up here. Together, that's a call spread. And these happen to have the same expiration date and they're in the same size. So by choosing them together, it's a normal call spread. You can see over time what my P&L does. But I can go and add more positions in there. Let's see if we have something else that's small to be able to add. Here, I also bought cash in 100,000. If I add that in, it changes the P&L exposure. It's showing us the profit and loss potential of all three of those positions. Or I can click here to choose all of our cable positions, all of our pound positions against the dollar, and they'll all come up into the same screen, ready to close all together at once. It's a little bit slow. I probably have a whole lot of positions. There you go. Look at all these positions I've got, and you can see what my net exposure is. I'm long and short stuff all over the place, and over time you can see, I guess, that the shorter dated positions dominate the risk, but I can simply click and execute to close all of them and get rid of them all at once. So that is another neat feature that's unique to the mobile app. Unique to the WebTrader, that you can choose multiple positions. If you choose more than one position, but in different currency pairs, then they won't show up on the same screen. So here I'm short a call in Kiwi, I'm long a call in Kiwi. And if I choose dollar CAD, now I've got 3 positions. We cannot show them in a chart together because they have different underlying assets. So instead they come into this multiple order execution window, and you click execute to close all 3 of them. So I'm going to open it up for questions because we're running out of time, or probably I'm running out of patience from all of you who have kindly been listening to me. I'm just going to scan the questions, see if I missed. I'm sure I missed some things. Feel free to ask any questions. Somebody's asking about contracts. What was the question? Right, so obviously this is the same account whether you log into the mobile app or the WebTrader or our legacy Windows platform. We also have a professional Windows platform that you're welcome to use, which looks more like that. This is our old legacy platform where you can see all of your open positions here, and you see something that's more akin to what's called an option chain. You choose your expiration date and you see lots of numbers. You see all the prices and the high and the low and things like that, and you can click to execute, but you don't get the same charting capabilities that you have in the WebTrader. And of course, this is a little bit heavier to load, but it's an excellent professional platform that is certainly preferred by some traders. You also have tools where you also have this risk management tool, same as you have in the mobile app, which we'll soon have here in the WebTrader as well. But I don't want to focus on that today. Put spreads, butterflies. Butterflies have 3 strikes. You're buying a call and a put at 1 strike and selling a call and a put outside. So this is buying a straddle and selling a strangle. We have condors. Iron condor has 4 strikes. You can buy or sell your iron condor, change it to 3 months, whatever expiration date you like. And as you move your strikes, you can see how your risk and reward is impacted right away and structure the trade that meets your view. You like all that, all 4 of them, buy, execute, done. I've just bought 4 options, and there they are in my open positions window. Whoops, I've got to sort that by the order number again. Back up to the top. There they are, 4 Kiwi options. I sold a call and bought a call, sold a put and bought a put. And when I choose 2 of them, then you just get 2 of them. If I choose 3 of them, I could close those 3. I could close just a part of those 3. I can choose to close half of those 3. Execute. So now you're going to have 100,000 of one leg and 50,000 of the other 3 legs. And there you see them. That's done. So we executed 4 trades, but closed a piece of 3 of them. If I choose what's left, now the diagram is going to look a little different. Kind of cool, kind of funky, actually. Check it out. Impress your friends. Okay, so that's what we've got for today. I'm going to just check for more. I'm being asked, what is our best selling point about the new software? Andreas, that's a great question. The best selling point, I think, is this visual, interactive nature of the trading platform, that you really get to see and understand and feel the risk. And let's even ignore options. As we started at the beginning, let's just look at trading spot. Just trade FX. There's nothing simpler than this picture where I can see if the market goes up, how much money can I make? If the market goes down, how much can I lose? Put in a limit order. Take profit, stop loss. You can't mess up when you see a picture like this. I think that's a great feature. The options-related, option-specific features, again, the profit and loss diagram, the way you can see everything. Of course, we have superior pricing. That's notwithstanding. That goes without saying. But just the fact that you can change your expiration dates and see the risk, see that the range must be wider for a longer period, and the fact that we can trade strategies, and when you trade a strategy, you get improved pricing when you're buying one leg and selling another leg. Just the fact that you can execute all of these strategies with one click is another great selling point. On top of all the great benefits of working with AvaTrade, your regulated broker, regulated everywhere that we operate. And if you're in a country that doesn't offer regulation, then you get coverage from the entity in which you register, which is usually going to be the parent company in the BVI. You've got great pricing and customer service, deposit methods with quick withdrawals, all of those important things. So with that, I'm going to end it. Wait, someone is asking one more question. If the price ends after the set period, the green and red bars are the profit or loss you make at that time. I think, Johan, you're probably asking about the multiple positions in one chart where you have different expiration dates. The charts always assume that you reach a certain level and then you stay there. So for example, I sold here a Kiwi option expiring on the 31st of March. So let's buy a Kiwi option for a shorter date. Let's buy a Kiwi option for 2 weeks. And we'll keep it at 100,000. I'm gonna buy this. Okay, so now we have a new trade in Kiwi. This is the trade that I just bought, but earlier we sold an option that's a bit longer dated. And what this is showing us, they have different strikes as well. It's showing us what happens if we move to a certain level and then stay there. So the first option is expiring in 14 days. So if I go to the 14-day mark, that's where the first option expires. Let's make this, not this one, let's make these a little bit bigger. It'll be easier to see. Can even close this, make some more room. The first option expires in 14 days, which is here. So you get a kink right here in the buy, and then the second option expires much later. So the assumption here is that we move, the P&L diagram's assumption, because I have no other way to draw this, is that we move to the new level at expiration of the first option, and then we stay there afterwards. Okay, you're all welcome to send us questions, to come into chat right here, chat with us and ask questions. You can come into chat in the AvaOptions mobile apps as well. You can email us, and I wish you good luck. Again, stay healthy, stay classy, and use a demo account until you really understand what options are and how to trade with them. Thanks very much, everyone. Goodbye.